Welcome everybody. I'm sure people will continue to join us. We've got a good turnout as it stands already. I'm Mike Wright. I'm Director of Membership and Communications at Bond. We're delighted to be running this webinar in conjunction with StoneX on mastering bank account fees, charges and cash visibility. Just a little word about Bond's relationship with StoneX. We've been working with StoneX for quite a number of years now. Many of you will know them as, well, they're obviously one of the leading global financial services companies, but many of you will know them really in their guise as FX providers. And we've run a series of webinars with FX over the years on, particularly on currencies which are difficult to obtain, currencies which are volatile, currencies which are in difficult to access places, and we're delighted to be running another webinar with StoneX and together with TIS today on the current issue. I'm delighted to welcome Ed Phelps, who's the Head of Sales and Strategy for StoneX Technology Services, part of StoneX Payments. He's previously worked for Swift in a strategy capacity and eBury in a sales role, and he brings a blend of experience from the banking and fintech worlds. And also Dr. Jack Yarnambena, who's an SVP solution architect at TIS, is a passionate entrepreneur and treasury professional. He's worked with different treasury management systems within corporates, but very keen on the whole process of streamlining processes and significantly reducing the total cost of ownership by removing complexity. So we're delighted to have those two speakers today, and I think Philippe is in the background from StoneX as well to answer any other questions. We just a bit in terms of housekeeping. Today's webinar is being recorded, will be shared online and in the post-event email. So if you no need to desperately take notes, we'll also attach a copy of the slides that are being presented. If you can, please add your name and organisation to your screen name so we know who you are and where you're from. Captions are available if you follow the buttons at the bottom of the screen, and you can turn them on if needed. That they're very accurate these days. We'll post a feedback form in the chat towards the end of the discussion, but we would encourage you to fill this out and let us know what you think of the event and whether there are other issues that you would like to see covered in this series, and particularly with the support of StoneX as well. And we invite your comments and questions during the Q&A session. You can use the Q&A chat box on your screen, or use the raised hand feature to ask any questions. To help facilitate discussion, just say who you are, where you're from, so we know we've got a sense of where you are and what your organisation is, and then we'll endeavour to answer your questions. We can take questions at the end, or we can take questions in the middle. We're very relaxed about how we take those. So I'm going to hand over to Ed, who's going to give you a bit of overview of the session and what to expect. So welcome, Ed and Jack, and really delighted to be working with you today.
Fantastic. Thanks, Mike. Appreciate the introduction and overview of the session. And yeah, to kind of reiterate the point here, one of the reasons why we wanted to set this up was to really try and simplify both payments and treasury. And obviously that's kind of the premise of the partnership that StoneX has with TIS as well. So if we're successful, hopefully we've simplified some of these topics for you, and at least given you kind of a path or a roadmap to address some of these frequently asked questions or sort of common challenges that we hear our customers of all different shapes and sizes encounter. And maybe just on that last point, we are aware, every organization is unique and complex in its own right and has different sizes and challenges. So we can't address them all, but hopefully, there are some constructive pieces to take away here. So just in terms of the flow of the session, we've kind of positioned this in terms of, the frequently asked questions that we get, where we put it in what we think is a logical order. And I'm going to be asking Jax all the tough questions and hopefully to stimulate the conversation. And then we can really take it from there. And we've got some slides, as Mike said, to share. So maybe, Jax, let's dive right into it then. It's probably my favorite question that you can ask. And it quite simply is, where's my money? But to give you a bit more context to that, in terms of actually tackling these challenges of a lack of cash visibility, simply knowing, how much cash you have in one account or 100 accounts around the world, what are those associated risks and security concerns, and what can be done to make it easier?
Yeah, thank you on my side and welcome also. Very happy to be here. Hopefully you will gain some insight into the question that actually arrive always when we have conversation with different customers. So, and the main question, I remember when I was treasurer in operation, it was always in the morning, how many cash I have on hand, right? What can we do today, actually? Because everything that corporate is about the cash flows. And that is really tricky because organization usually optimize the flow of services and goods, but they forget actually the flow of cash, right? And therefore the question related to the cash will be very important. But why is that important? Before we answer even to this question, why is that important? Because actually it's impacting a lot in the corporate, and we can list maybe 4 or 5 because the list is not exhaustive, but we can go through topic related, for example, to the strategic decision making, right? If you want to take decision, you need to know on what you base to do the decision and what the influence will be. That means cash visibility will actually impact different layer in the company. The first thing being liquidity management. Liquidity management will be impacted because you have topic related to how you navigate the procure to pay processes. How do you meet short-term financing, right? And also, will you face kind of liquidity shortage, right? And that is important. Even if you look at the accounting side on the IFRS norm or US GAAP, you have this going concern, which is a principle, which is also based on the fact that you can ascertain to pay. The business continuity is there, but you can also pay your partners. And then we have everything related to working capital that fit also kind of liquidity management too. But you would like to know clearly if you have a lot of money that you can position somewhere, or you have shortage in money that will enable you to have a better funding manage. The cash forecasting support that, of course. And of course, you have the financial reporting that is also important, using the liquidity and the cash availability. All these turn around 2 main topics. First being liquidity, help you to navigate strategic decisions, but also risk management at the end of the day. So now that we know how important cash is anyway, how can I ascertain that I have the visibility? Edward, like you said at the beginning, corporate organizations are diverse. They are doing business in different markets. They are serving population in different markets, in different countries. And therefore, the complexity is different from one to the other one. However, what we do see today is that independent of the market you do or the country you actually addressing challenges in, there is diversity in the way you get information on the cash. And this diversity, you need to simplify it. You can simplify it when you have one system. That is a treasury management system or a cash management system that enable you to centralize the information flow. That is the first way. The second way is, of course, when you implemented this system, to ascertain that the system help you reporting on central level of information. It's very complex to get information if you are headquartered in London and you want to have information from, because you're serving a customer or you're doing services in Ghana, for example, or in Santiago de Chile. You want to know what is there in the account because maybe intercompany or intra-organization flow need to go through during the day. Then the reporting is extremely important. And to do that, you need to have kind of strengthening your control. We're talking about here about standardization. You need to ascertain that they have standardized processes on the reporting too, and the way also collaboration happen in the company. So the main challenge, of course, will be which, even if you centralize it, do you have the capability to read the format? Do you have the capability to read the reporting that you get? And those are questions that you, as StoneX, for example, answer, or TIS on the other side. So to sum up, to get visibility is actually very easy if you standardize your organization and if you have a central system that support decentralization and support also to the way the technology is available in the country where you do business.
Yeah, well, thanks for summarizing for me, Jax. I think you've hit the nail on the head. And typically the question is then, well, how can I kind of remove a lot of these manual processes to really understand these statements and read them and then put them into a system, or if there's no kind of software system into a spreadsheet. So it tends to be kind of a segue, but a related topic to the, where's my money question. Now, moving on just to the second question that we have prepared, it obviously ties into that first one, is how can I, as an organization, rationalize the number of bank partners, bank accounts, knowing it's a burdensome task to not just open one, but to administer it, to run it, the costs. What's your experience of rationalization? And how else can organizations reduce their bank wallet?
So it's also very important and funny question, because it's some organization will say, did I have even to rationalize them, right, at the first place? But the answer here is, first, do I know how many relationship I do have at the first place? So, and you will be surprised, a lot of organizations will not be able, or treasurer will not be able to answer to the question, because they might know what is at the headquarters and the main bank wallet, but they might not know what in the subsidiaries or in other layer in the organization, other country, the bank relationship that actually are happening on the daily basis. So, which lead to first try to understand, the wallet, put the wallet, how many banking relationship I do have. If I cannot answer this question, is the first thing to do. And if you got the chance to answer to this question, then you will be able also to answer to the next one, which is related to the services that are behind those relationships. At the headquarters, we always care most about the financing part, and maybe we try to optimize based on the stage where the Treasury Department lies today. What we do forget is, in the region or other entities, we have still a lot of costs that are happening because we don't have a streamlined relationship management with the third party that are the bank in this case. Let me take one example, because when we talk, it's always like in the theory. So I'm headquartered in Frankfurt. I am doing business in 90 countries worldwide. I have 5-10 big relationship, use case, big banks that everybody might be aware of in this world. And within this wallet, I have not centralized the way I work. That means a treasurer, a regional treasurer, might have a contract with the same big bank, but have different conditions, completely different conditions that are more expensive than the headquarters. So the fact that you centralize, you standardize, and your banking relationship will give you kind of power in the wallet. That means you will have a discussion with your key account manager at the bank side and try to have a global cost against the services that you get. So there you optimize already within the big banks, just at this level. But now, if you have different small banks, for whatever reason, we know that in some country, you cannot have a big bank just because of regulatory requirement to pay taxes in maybe Argentina. You might need to have an Argentina bank account in a specific bank. And therefore, you cannot just come with big banks, right? So also there, it should be clear to you, for example, I need to pay something in Argentina. Do I need to do the business with my main banks to settle the payment in FX? Or if a third party helping me to do a settlement in a better way to have more rationality. So the question of how I rationalize the banking partners is important for you to negotiate competitive pricing, optimize your treasury operation, but it's only possible if you know your current bank wallet and also you consolidate your bank services.
There's that kind of careful balance between using the global banks and domestic banks and really working out, well, what do I need for what purpose? Am I, is there a legal requirement or a regulatory requirement or some requirement to have a domestic account for whatever reason, taxes, salaries, or what have you? So not as easy as just reducing the accounts. Some thought to be put into that, once you've discovered your entire wallet, as you say, Jax, which I think is quite a nice way of looking at it.
Maybe one other aspect, you might not be able to reduce all of them, but it's also important to have at least 2 banking relationships, even if you are very good, just because of the third party risk. So what happened? We experienced at certain point of time, we never knew that a country can run bankrupt, right? Or a systemic bank can also run bankrupt. So you cannot put all your eggs in one bank somewhere. Yeah. So that means you need also to take into consideration the risk of the third party, even if they're global banks. So you might need to run with 2 or 3 maximum banks. But if you have 5, then the question is already, my goodness, what did I do with 5 banks in one country? What is behind this? So that is a question that is left to treasurer to answer.
So key takeaway there, Jax. Don't put all your eggs in one bank. So I think that's particularly useful. Won't forget that one in a hurry. Look, I mean, maybe I'll ask a question now, and we can answer at the end. But it's well, how do you, if you're not a large, sophisticated organization, how do you then monitor the kind of safety of these banks? How do you then actually decide? Because that in itself is a tall order. It's a big task, and then many organizations struggle with it. So anyway, maybe we try to address that at the end, unless you feel a pressing desire to do it now. But just moving on with our third question was, how do we spend less time reconciling those statements? So knowing that, each bank will have a different format, a different standard, whether it's a CSV, a PDF, or one of the many Swift messages, not to sort of bore people to death, but there are multiple different types of Swift statements you can receive. It really introduces a lot of inconsistency into the information you have to really consume to see, well, what cash do I have? So is there any way that this cost can be reduced? Obviously, one is about processing these reports. One's related to the fees. But what are your thoughts on those on the bank fees?
So the bank fees, you need to know them at the first place.
Yeah.
So the problem is that if you have a standard reporting MT940 or you have a claim format, you will not get the fees there. They are hidden somewhere, and generally you have those accountants try to find out where the fees are, and then they book it the way they understood it, and that is already the big problem. So you need to make sure or ascertain first that you get a really standard reporting about bank fees, and there are a couple of them out there. You have some PDFs, you have the 88. You have also the CAM format, the twist. So you need to ascertain that you get first the bank fees reporting. But when you have them, and that is the funny part, some will tell you, like I can do that with Excel. Well, not optimized at all, right? So then when you have them, you need to know your contractual agreements because we do trust our banks. That is fine. What I also do know is that some big banks have been fined hundreds of millions of dollars because they used to book more fees than it's in the contract. And what I also do know is that the White House or the American Association, fighting for the right of the consumer, and also the European Bank Association, have taken that seriously if the banking are booking the fees that are actually in the contract. So you cannot trust only your banks to do their part because they respect all the contractual agreement. You need to know what is on the contract. And then you need to have a tools that help you to confront between what is on the contract and what is on the fee side. If you have this clarity, then you can actually use that to compare within your own wallet of banks, which bank is too expensive, before you even go to compare with the industry, right? And that gives you confidence to take the right decision when we come back to the banking relationship. Which banking here is more expensive or not, right? Those are all those questions that is a systematical way you organize treasury to find out, to make treasury becoming not a cost center, but really also being active in the way you reduce fees or you participate to P&L. So reporting, know your contract, know have the right collection of format, and also compare those with the right tools in order to get a clear view on your wallet. That will be my answer.
Fantastic. I'm just going to pause and just sort of time check with Mike. We've got a couple more questions part of the schedule, but equally we've got some coming through the audience. We can always take those now.
Yeah, I was going to say there's a relevant question now, Ed and Jack, about and I've seen this in other forums in terms of organizations saying, their bank accounts are suddenly being closed. And here's a question. It's from an anonymous attendee, but are you seeing any increase in banking regulations relating to fraud or money laundering risk that's resulting in accounts being suspended? Any advice as to how to tackle or preempt this? This person's had 2 accounts suspended for no reason provided, and we're struggling to obtain information as to how and why this has happened. I should say that from what I've heard across the network, that's not an unusual experience. It seems to be happening with greater frequency. But what advice would you give to an organisation in that situation where how do you de-risk the accounts you've got from being suspended? What would you say?
Yeah. Okay. Yeah, and it's topical certainly in the UK around kind of de-risking certain retail or corporate customers, and actually, Jack's, we had prepared such a question, but the way we had phrased it or looked at it was how to manage this perception of high risk, and kind of the way we wanted to tackle it was, banks are becoming less and less willing to take perceived compliance risks, and obviously that's we've got validation from the audience on that. And on top of the fact that banks are / can be sanctioned today, and there are fraud related challenges. So we have definitely prepared something, and I think Jack's would probably be good to double click into that and share your experience of that kind of perceived high risk, and from your experience, what could be done in such instances.
So, and that is you put it right. The banks themselves can be sanctioned today. It was not the case some years ago, but we got to that, and therefore the perceived risk, and you have already that in your KYC. When you do a KYC, because you want to open a bank account, you get a lot of information that make you crazy, and you also have to confirm the ultimate beneficiary. So the bank would like to cover even the hidden questions. So that is fine, and that is also normal. It's regulatory requirements. What you need to do in general, the perception of risk is the perception first, because the risk mitigation, the likelihood that it happens is low in general. When it's high, it's not a risk anymore because you know that it's coming anyway. So you need to fight the perception, and you only fight the perception in the way you organize internally to have a lean organization on the payment side, or on the collection side and the reconciliation. We're talking about segregation of duty, business continuity topic, 4I principle, straight through processes. If I heard that treasurer Upway still today take a payment file manually, upload that, or send that via email, I'm like, my goodness, even the state got hacked today. What the hell do you think that somebody cannot use your file before you upload it? Or internet fraud also happened there. But that is one part. The second part is how your international company, organization, how do you ascertain that the file that you send to your banks is compliant? You cannot give the bank the to-do to check against regulatory compliance. You need to make sure that all those regulatory, the OFAC, the Treasury of the UK, all those, the European Union, United Nations, all those are screened already in your payment to make sure you will not be sanctioned. You cannot just give it back to the banks and ascertain that the bank will do that for you first. And when we talk about perception, by the way, if you send that to the bank will do that because they must do that. But they have to report to the central bank what is happening. If you have a lot of attempt to pay to sanctioned person, they will report that. And that hide the perception and also make complexity when it comes to your own KYC afterwards. So you need to find the tools that support screening of the information before you even send that to your banks to ascertain that the perception against third parties already met. At the same time, you need to address topics related to fraud. Internet fraud is a reality. So if you screen against fraud or you have mechanisms that consider innovative solution like payment behavior, machine learning, we're going about all those things, artificial intelligence, broader data that help you to ascertain that the information that goes out are real and it's okay. That is how you manage the perception of risk in general. But it will still remain, right, the perception.
Yeah. So it seems almost put yourselves in the shoes of the bank, in your own organization and have a look at it from that perspective. But I know from previous experience that actually banks are not, are kind of worried about the governance and the processes and the frameworks around, well, what if something does go wrong? What's in place to kind of reduce the fallout. So yeah, certainly something hopefully we can educate the audience on that. Look, I know we haven't got long left. Mike, I'll just double check. Are there any more questions? If not, we've got a couple more we could cover.
No, keep going, Ed. We haven't got any more questions at the moment, but please do ask if you're listening. Yeah, back to you, Ed.
Cool, thank you. So maybe Jack, so we can kind of wrap sort of two questions into one and sort of do a wrap up of the session. The last point that we need to kind of address today is, where can we be more efficient, right? We've picked out a number of different topics. So, the hours of effort that go into often manually balancing the books. What are the additional areas we can think about? And are there, and this is somewhat of a tricky question to ask you to finish on, is, if the organizations of varying levels of sophistication, what are the kind of key things to action and prioritize after this?
So I will kindly ask you to show the last
yes,
slide.
of course.
It's a complex slide, but it answers already all those topics. So to reduce complexity and to be efficient in the organization is not an easy way. It's a going process, right? It's a journey that you go through, and that also shows how mature your organization is in general. So depending on the organization and how much mature you are, you need to address some topic one by one. And the centralization of operation is actually something that is already the first way to reduce the complexity. Do you want to optimize at regional level, at country level, at holding level, or do you want to even create a financial holding that just care about that and try to optimize everything that is related to that? Do you want to standardize your processes? That will be the next, and you see the return already here, right? But where you get the most big return, independent if you are already on the top or not, is about optimization of payment and reporting. Because when you optimize that, let us take one example on the FX side, right? If you have a very good, effective FX tools that enable you to optimize all your transactions related to FX worldwide, the return is clear, right? On the payment side, it also gives you, or the fees, it also gives you clearly the biggest return. And the risk is also more mitigated because you have a central platform or a central way to do your treasury operations. The cash forecasting enables you to have a clear view. If you depend on donors, so how do you forecast the donor income? How many cash do you have now? How many, the procure to pay process? When do you have to spend the money? When do you expect financing? When do you have to pay back financing? When are the biggest donor giving you the money, and so on and so forth? So that is where you get the more return, and you have the risk reduced. But if you are willing to be perfect, you can also go through the netting. You can also go to more financial complex topic, IC, lending and pooling topic. But again, the return become less because you start to behave like a bank. So what you gain in the financial return, you lose it into the whole drama related to documentation and related to reporting internally. So when you have an in-house bank, you behave like a bank. Basically, you create a mastodon of work internally to gain some fees. So you need to waive where it fits better for you. Without any ego of the treasurer, I want to have the perfect treasurer. Does it fit first to your organization at this standpoint? Is it effective on the two sides? So, and that is where I will say you need to be in the shoe and know the organization in order to make the right decision. The tools help you, but at the end of the day, you need to have the balanced feeling, right? Where you want to situate the treasury journey for the corporate or the organization.
Okay, absolutely. So yeah, there are a number of steps, 5 steps you've highlighted there. Maybe the end two are somewhat reaching for the stars and perfection, and might be out of the realms of not just organizations in this call or anyone globally. Maybe some of the biggest companies may not even reach steps 4 or 5 or maybe even 3, but at least I think there are some takeaways we can give to the audience in terms of maximizing the efficiency and reducing some of that complexity on both the payments and treasury side. So I'll just double check with Mike. Are there any more questions or?
No, I want. You can tell. Going to tell them. You'll be able to tell from this question that I'm a non-finance person. But you talked earlier about the wallet and the basically the need to do an audit of an organization's in all its sort of in its different country locations. To understand the number of bank accounts in its in different jurisdictions and so on. If somebody goes away from this webinar saying, "Well, I need to do that," how would you suggest they go about it? What's the approach? And just as a second question, you mentioned that in some countries that there is a requirement to have a domestically situated bank account. Where is that information freely available? Where would people find that out? And so the 2 things really: how do you go about an audit, and what's the sort of where do you source the information from for understanding the local requirements?
Yeah. So thank you for the question. So normally you should go back first to your corporate legal, because they obviously have a legal structure of where the company are, right? Hopefully. So if they have this structure, then you have to ascertain to know who have the power on what in the banking landscape, right? Because those people already can go they can also go by and sign something, even if they are still not, it's even dangerous. If you don't know them, they can go just and sign something and collect the money and disappear. So you need to have inventory of people having power into the bank account first. And secondly, your big partner is accounting. Accounting obviously has to book the bank account. And the first thing that auditor does is to check the bank balances, hopefully. We have experienced some cases like the last year, even in Germany, the biggest one, where it happened because the auditor have not checked if the bank balances is exactly what is in the account, right? So you need to go there at the accounting level. Or hopefully they have a very easy consolidated account structure, and now you can see exactly on your ledger which account has been booked. That is already the first thing that makes your life easy. And then when you have those accounts and the related banks, then you can ask to the treasurer or the accountant in the region, could you please check who have the power here, who is the bank partner? So it's not an easy job, right? But when you do that just once, and then you have the mapping, and you can start optimizing. I hope it answered your question. It's really different.
And just in terms of understanding the the local requirements, how do you find that out? What's is there a source of? I mean, I suppose people could talk to you potentially and find that out, or is there a source of information that is readily available?
There are different ways to get it, because when I talk about those having power, they have power for a reason. Sometimes they need even to sign for the tax payments, right? So that is one power. And they, for example, if you have to pay taxes in Italy, we have seen the European Union. The format that is required in Italy is completely different than in a standard ZEPA country like Germany or France, where you can just do a wire transfer. That is completely different. So you need to, obviously, the accountant can provide you the information if it is not available online or on the Department of Treasury of the country. But when you open the entity or you do a merger and acquisition, obviously you will already question, why do we have an account against the central bank? Or why do we have an account against the financial ministry, the central bank of the country? Generally, those kind of accounts show you that there's a regulatory mandatory requirement to pay to those specific accounts.
I don't know, Philippe, if you've got anything to add to that, and I'm sorry, Philippe, to put you on the spot, but from your experience, can you share anything in terms of the need or the requirement to have accounts in certain countries?
Oh, well, I think it depends on the countries. First, if I may add something about one of the questions that was asked earlier, I do see that having a solid AML policy is something that reassures any banking counterparty in general. And that might be a first step, if it's not in place already, to avoid any potential closure of the accounts, because that's something that any compliance department is very keen on. Then ultimately, if there are more precisions about the country where it's located, because it's difficult to have a general approach. And we see that in StoneX Payments, as we work mostly and exclusively with local banks to deliver payments, that every single country has particular requirements, and those differ a lot from one country to another. In some jurisdictions, there's much more scrutiny and screening than in others, particularly for the NGO sector. So I'm happy to answer with maybe a bit more, not too generally, because that wouldn't not be possible to give too much of a general answer.
Thanks, Philippe, and apologies again for putting you on the spot, but certainly a useful addition.
I was just going to come in perhaps the final question, really. But I was really struck by something you said, Jack, which was about uh, the risk profile, and actually, I think we could do a whole webinar on this idea. But how do you reduce your perception of risk? So actually, I think it's not it's not so much that the organisations are high risk, but they're perceived to be high risk, and there's something really interesting. So I think that happens to. My impression is this is happening all across our network, and it's particularly an issue for smaller organisations. But just putting that aside, I mean, just thinking about smaller organisations in particular, where we may be talking organisations. Well, we have organisations, with a turnover of £100,000, but organisations with up to £2 million turnover, something like that. I find by and large that in all their financial transactions, they pay more than the larger organisations, because they don't quite know what to do. So they just sort of, I'm not saying all organisations like this, but they suffer more from the friction of transactions and the system. Just in the context of what we're describing here, that sort of scale, up to 2 million, maybe up to 5 million or something like that. But bearing in mind, we've got many more smaller organisations than that. What would you say they should do? What's the first thing they should do, having listened to this webinar? What advice would you give to a smaller organisation?
So the good news is we are not in the path where the information were hidden. So even if you have the biggest difficulty, ChatGPT help you today in just to make it funny, right? But at the end of the day, a treasury, there are a lot of analysis out there saying that starting 300, 250 to millions, then you have a treasury department. So which means you have specialized people that care, right, about all those things. For the smaller one, however, the information are out there. So you only need to compare or to find out comparison. Generally, all those tools we are talking about, they have a return on investment themselves. With treasurer doesn't just do not have the courage to start the discussion, because they think about the expenses before and not the return that might be associated with having those discussions. A small organization, £2 million, doing business maybe in 3 countries abroad, and having a not only translation risk on the book, but also really a hedging, or paying huge amount for hedging for the small business they are doing. They also have access to StoneX, for example. StoneX have not reduced their business with how big your wallet is when it comes to revenue, right? And they also can do payment with others, right? So they only need to make sure they have the right information, and they compare the return on the action that we take with the actual investment, and not be afraid to make that. It makes, in most cases, sense. Normally, the investment in such solution should give you 2.5, so half time return on what you actually invest. That is it is something that is proven even more for fortune company, but more for small one, because they are at the earliest stage of optimization.
Thank you, Jacques.
Welcome.
Ed, do you have any sort of closing thoughts that you wanted to bring, or?
Oh, no, I mean, I think, Mike, to your point, it's really, what can you concretely take away from this call? Obviously, there's a lot of points that we've covered, from the cash visibility side to the bank fees, kind of the audit, or even fees that are hidden, and maybe some best practices, and kind of a roadmap to achieve this all. So actually, I'm thinking what we should probably do is, with our takeaways, is maybe summarize some of those steps and share them with the slides, and really see how this resonates with the audience, and maybe think about a follow-up if it merits one. So No, nothing else to me really, other than, thank you to yourself, Mike, and the team at Bond for allowing us to do our kind of Q&A with Jax, and thanks, Jax, for answering all of my tough questions, and some of them were planned, some are unplanned. Kudos to you, and also to Philippe for stepping in at no notice whatsoever. So thank you is really my last point.
Well, thank you. And I think just for the attendees, I think if you've got, if you do have specific questions sort of that you didn't necessarily want to raise in this forum, but you want to ask Ed or Jacques or Philippe afterwards, then by all means, we'll send the contact details with the slides. So by all means, follow up with any of them. We're also interested in any ideas about future webinars along this line, because we'll be working again with StoneX in the future. But just like to particularly thank Ed and Jack and for a great session, and Philippe in the background there, and to the rest of the Bond team. But and thank you for attending and participating, and I hope you found that useful. But it's keep the conversation going with these guys, because I think they've got lots of advice to give. So thank you very much, and have a good afternoon.
Thank you. You too. Bye.
Thank you.
Thank you, everyone.